It's been a tumultuous week for WeWork since their failed attempt at an IPO, with the company now having to put a stop to the signing of new lease agreements with property owners as the loss-making business attempts to rein in costs. WeWork's parent company, the We Company, had to postpone its IPO last week due to investor scrutiny over its growing losses and also worries regarding corporate governance. Their underlying business model was also brought into question with its reliance on long-term liabilities and short-term revenue. The move is leaving commercial property owners around the world who rent to WeWork a little nervous, with the company being the third biggest tenant in New York and the second in London, coming only after the government. The decision to stop all new leases comes as the We Company reportedly plans to lay off several thousand of its 12,000 plus employees in the next few weeks. Some of those who face being laid off include around 20 employees, many of whom are holding top managerial positions, who have close ties to co-founder and former chief executive Adam Neumann. Among the senior figures under pressure are Vice Chairman Michael Gross and Chris Hill, a brother-in-law of Neumann's wife Rebecca, who is also stepping down from her role at the company. The new co-CEOs, Artie Minson and Sebastian Gunningham, have also been quick to put up the Gulfstream jet that WeWork bought new for more than $60 million last year. Adam Neumann had reportedly also been using the jet for parties and trips around the world for family members. The new co-CEOs have also made the decision to sell 3 of the acquisitions made under Adam Neumann, namely Conductor, managed by Q, and Meetup. The company is expected to hold on to Flatiron School, a coding education business it bought 2 years ago. We Company have been in crisis since Neumann was pushed out as CEO on Tuesday in the wake of the failed IPO, which the company had hoped would bring in some much-needed funds. The group has been burning through cash with its expansion to over 500 offices in over 100 cities across the globe. Last year, they reported a loss of $1.6 billion. The company is at least set to receive a short-term boost with a $1.5 billion capital injection from their largest investor, Japan's SoftBank, reportedly the ones to push for Neumann's removal. Creditors have raised concerns over We Company's capital reserves, and on Thursday, analysts at S&P Global cut the company's credit rating deeper into junk territory. The yield on the company's debt rose above 10% on the downgrade, in a further sign of the financial strain that the group is currently facing.